So for this morning session, technical session on Dhan to Jan Suraksha, building resilience for women, we have a esteemed panel to be moderated by Ms. Pallavi Madok, Lead Advisory Services, Women's World Banking. May I invite Pallavi on the stage, please? And we have with us in the panel Mr. Joydeep Roy, India FS Advisory Leader and Global Health Insurance Leader, PwC. And we have with us Mr. Neeraj Maheshwari, Chief Executive Officer, M. Swast. Give them a round of applause, gentlemen, ladies. Uh, and we have two dropout speakers that you might see in your list. Mr. Assis and Mr. Mayank have dropped out. We hope we have a good, insightful conversation. Now over to you, Pallavi.
Can you hear me now? Okay, perfect. Thanks. Sorry. I'll keep it away. Please do come closer. We want to keep this conversational. I was just chatting with Joydeep and Neeraj that, we would love to have a discussion with the audience also. So we're going to leave lots of time for that. So let me just set the context. The topic for today is Dhan to Jan Suraksha. And all of us know about the success of the Dhan accounts, the no-frill accounts that have made banking accessible to almost all Indians, including women, or especially women. Now, at the back of Dhan, it was a humble account, but at the back of the Dhan, there was Jan Suraksha, which was a simple insurance solutions, social security solutions like the PMSBY, PMJJBY, and the micro pensions that was attached by the government and distributed by the banking BC channel. And so therefore, this whole suite of products, Jan Dhan plus Jan Suraksha, made for, in a way, for the first time, a large-scale adoption of micro insurance solutions in India. I know it's not the first, but in terms of size, it's definitely a large number. Let me quote some numbers for you. As on April 2023, 66.76% of PMJDY account holders are enrolled in accident insurance, 31% in life insurance, and even 10% in a regular micro pension product. So I think we can say it's widespread adoption. The question is, did everyone adopt it? And how did this happen? So that's when Women's World Banking, did research in the field. We already were working with a lot of public sector banks, helping them deepen their engagement with customers on the Jan Dhan, the entire solution. And we did research with over 900 women customers in the field. And the results were genuinely that 65% of Jan Dhan women we met had enrolled in at least 2 Jan Suraksha products. And so how did this come about? Because compared to the rest of the retail insurance industry, that's a phenomenal adoption rate. There were 3 primary reasons, and none of this will be a surprise to you. But it's not about the design, it's actually about the execution. So the Jan Suraksha schemes are affordable, they're highly subsidized by Government of India, but it was also adopted by a variety of low-income women. So we looked at the income distribution and the adoption across income distributions, and right till the bottom of women earning around 25,000 rupees per annum, their own income, they were adopting these solutions. They were easy to access. So yes, the BC channel was a fundamental difference in the way the insurance industry distributes its products vis-a-vis how these Jan Suraksha products were distributed. And more importantly, one level deeper, 34% of the women we spoke to said that their BCs had actively sold these solutions to them. So it wasn't just a involuntary bundling of a product. They were actively pitched to women. And they were easy to understand and simple to use, and this is very important for us because 83% of the women understood the benefits. It's a very straightforward product, and 73% actually found them useful. Of course, the question, I'm sure the insurance experts will say how many claimed, how many benefited, and we'll come to that. But at least they believed it was useful and relevant for them. So now what we believe is that Jan Suraksha has created a solid foundation. It's not easy for the private industry to create this kind of a large-scale solid foundation, but thanks to Government of India regulation and policies, there's a solid foundation that's been created. But there are also some gaps. Women still stay vulnerable to external shocks, right, despite this widespread adoption. So, health is unaddressed. 56% of the women surveyed reported that they're still extremely vulnerable to any health shocks in the household. Coverage is low. 38% of them, when there's a emergency, still go to their savings, and then 42% of them then rely on credit. So it's not like insurance is really supporting them at the time of crisis. And the claims, so only 2% of them actually used these insurance products when there was a problem. So in this context, keeping this context in mind, we also have the insurance regulator providing us all a vision of providing insurance for all by 2047. So there is definitely regulatory nudges in place for the industry. And so we have Jan Suraksha, solid foundation, we have regulatory nudges, we have opportunities still unaddressed. In this context, I wanted to really open this panel to explore these opportunities, explore the gaps, and how we can do better and how we can actually leverage on this foundation. So I'm now going to open this for questions. So yeah, Neeraj, why don't you just share, your thoughts first on what the opportunity is?
Thanks, Pallavi. I think you've mentioned a lot of challenges, right? Very frankly, I would say even if we have to think about it, it will take a couple of years, right? So, but I think you've rightly, I think, pointed off a couple of points, right? The couple of things which comes across, are there right products, right? One. The second, why people are not utilizing the product, right? Are these new channels coming in the way of insurance, whether Bima Sugam or Bima Vahak, are they going to be really effective or not? So there are a lot of questions to be answered, right? While we look at it, see, what as a company we are doing, and I'll slightly touch upon and which I'll cover, but I'll also, you can keep interrupting me for a question. So, we were aware when we were building the pure, we set up as an insurtech and a health tech company, right? Pre-COVID, we were very proud what we are doing. Telemedicine, we touched great number, and the COVID spike got over, the numbers fall flat, right? So the utilization which touched 30-40% came down to 10%, and like what is happening, right? We thought we have achieved a lot, right? So the whole thing, the journey of the product, if you keep it on the mobile, and here I'm talking about the larger masses, not the classes, right? So today when I see insurance penetration, Jaideep is a sector expert and he'll touch upon on that. The whole thing is and what we call as, typically I call them LIC policy holder, that technically they buy the entire insurance for the country, right? And despite that, India amongst the lowest per capita as far as the insurance premium, one of the lowest developing economy as far as the per capita insurance is coming. Similarly, on the healthcare side, we have one of the highest out-of-pocket health expenditure when it comes to the health expenditure, almost 60% at the economy level. And if you go to the rural, it's more than 70% out-of-pocket health expenses. Coming to the women, right? I think it will be far worse, I would say, right? I would not use the better word. It's far worse. Why? Because they're largely adversely affected because the one is the accessibility on the ground. There are no female enough doctors and lack of public infrastructure. I'll be very open about it. Where do they go, right? Typically, for a normal to meet a qualified doctor, they might have to travel 40-50 kilometers. What is the choice they've got? At a panchayat level, the solutions which are available, they do not have qualified doctor. They largely end up going to quacks. So those are the fundamental challenges I see. Jan Suraksha and probably the schemes have made an impact, positive impact, when it's coming and touching to the people, I would say. But there's a lot deeper has to go when it comes to us, while designing a solution. Ayushman Bharat has been effective, but one of the example I'll show you is, the 70% of the claims are from urban. From urban India, right? The ticket size, because they largely cover the hospitalization, they largely cover the surgeries, they end up going to the urban hospital. Being rural, the hospital infrastructure, either they have not built up that facility or they're not able to entertain those. So they have to again come to a, I'll just give you an example. I come from a small town in India. Still, you have to go to a large district. You have to identify a couple of districts and you have to reach there. So those are the fundamental challenges which I see, and probably will be listening, sharing more about our
So,
solution.
Joydeep, why don't you add to that?
Yeah, so good morning. Good morning, everyone. It's a cold early morning, so we have to talk of things which are also warm to keep us warm. So let me give a little bit of, try to add a little warmth to these numbers. See, we can talk of numbers of penetration percentage. We have to think of where we started from, which is in the, let's say around mid first decade of the millennium, 2004, 5, when there were, let's say, liberalization happened. There was an understanding that penetration had to increase for overall protection of people's livelihood, wealth, prevention of poverty trap, making sure that if the people that there is money for family, etc. So that's the time. 2004-5 is when this awareness started. We might keep saying that we are 3.2, 1.1, whatever percentage, but let me try to decipher that a bit. So, when we talk of insurance, we talk about in life insurance, we talk of the premium divided by GDP as a percentage penetration, which is quite odd considering that even if you take term products, the term product price has fallen from 2005 till now. GDP has increased. All of us are so proud of our increase. So, even if people keep taking, that measure itself is wrong. It should be on coverage. It's a risk. If we're talking term product, then it's a risk coverage. And therefore, we should look at how much sum insured has been increasing. And you'll be surprised to find that the sum insured penetration from 2005 till 25, if I take 25, in these 20 years, has grown up by more than 25x, 2,500%. Now, what percentage of GDP is the premium and all is a very different measure. I don't think that should be a measure at all. It should be how many people are covered, how much are they covered for. The protection gap is a far better measure. That if you look at people's livelihood, the production, that what are they producing for the families, earning, income, savings, is it being protected? So that if something happens to them and they do not fulfill the whole purpose of their whole producing journey, then the next generation, they get the benefit. So that's number one. Number two, look at savings product in life insurance. There, it is probably fair to look at a savings percentage and look at, but then again, looking at, again with the GDP may be wrong. I think we should look at what percentage of national savings is being saved through insurance. And then benchmark it with other countries and figure out where, and country to country it differs because of also the laws, regulations, tax, culture, social structure, family structures. It differs very widely. But still one can try to do an analysis. And these are things which we, of course, a lot of our people constantly deal with. So I think the right measure for the savings part of the insurance should be savings divided by national savings. Because national savings is also fluctuating figure. It gets diverted between, say, the precious metals, real estate, bank, and stock market, mutual funds, etc. So this is just another instrument of savings which has a long-term nature, compulsory nature, SIP kind of a nature. So therefore, that should be compared. So like-to-like comparison will give us a feeling of where we have reached from 2005. Which is also, by the way, it's a balanced, it's not as great a figure as like the 2,500%, but it's a good mix. It's a balanced mix. It can't be too much. You can't say that 50% of national savings has to go into insurance, or you can, the reverse, nothing. Third measure, general insurance premium. Fire premium, if it was, let's say, and to give you all in perspective, if to insure this room, in 2005, if it took 100 rupees, any guess what will be the premium today? Just to say this is a banquet hall and you are trying to insure and the premium was 100 rupees in 2005. Anybody, any guess?
Any hands up?
2005 the premium was 105, 2020 100 rupees. Then what will be the premium on that scale today? Any hazard, any guesses hazards? Anybody has any guess except Kalpana, who knows everything? Yeah. Anybody? Anybody? Any guess? Any number? Come on. 50,000. Parvez also knows everything. So okay, he's been working in a GI company. So 700. So if it was 100 rupees in 2005, today the premium is 12 rupees. So now, what does that mean? If our GDP had remained the same, and the penetration had remained the actual penetration, which is the insurance covers taken had remained the same, would we have said that we have gone down by 88% just by premium? Not correct, no? The insured asset remained the same, this banquet hall. Say year upon year for 20 years, this has been insured, the premium dropped, the price dropped. Great. Affordability has gone up. We talk about accessibility, affordability, and so glibly, but we refuse to even acknowledge the fact that in India, insurance has become affordable every year. Health insurance is the cheapest in the world. Cheapest. Okay, let's come to the. So, therefore, if I again give you a figure 2005 to 2015 was a 1100% increase of general insurance. 15 to 25 has been huge, which is fire, marine, all these, the acts of God. Whatever, whenever you are protecting your assets or your business against acts of God, that insurance, which is to do with earthquake, fire, flood, that has gone up humongously. And people have started, insuring more. So if earlier somebody was thinking 100 rupees too expensive for this banquet hall, and they are taking deductible, saying, okay, after a point I will insure, and therefore reducing the premium, now they're insuring the whole.
So Jaideep, the point you're making, I think, is that the measures need to be different. Now, given these measures...
Three more things.
Okay.
We do not count ESI. That's also insurance. We do not count postal life insurance. That's the second one. So, and of course, we don't count Ayushman Bharat that way. So, if you think of all of these things, I think our penetration figures, which we talk about, are not that bad. In fact, they are quite reasonable compared to a economy that we have.
Got it.
So I want to give that perspective. It's not that everything hunky dory, and we'll talk about it maybe of what is wrong and what needs to be done.
Okay. So, however, today in this, so that was the economy level view, but we are solving for a customer segment. And what we're asking, and as we as Women's World Banking also are asking insurance companies to now segment the market and look at a variety of people in the pyramid and vulnerable populations especially. So Neeraj, the question to you, because you're frankly the voice of customer for us. Are the needs of women or men in rural India, their lived needs, any different from us? Can insurance companies who've been successful in India, and I take that point from Joydeep, there has been significant work that's happened in the industry. Can we apply those products and learnings and apply it to the market that we're now looking to solve? Or do they have different needs?
See the needs.
And you can speak to health insurance in
Completely. So I'll touch on health as well as the insurance part of it. Yes, see the needs are different. I would say the needs or the kind of products you deploy has to be in a different manner, right? I'll give you a couple of examples, right? The product, I give you an MSOS example. So we are a health tech company. The product which you can use on mobile, they probably would need an assistance, right? So they're not really maybe the awareness or education, you put everything together, or they're not well versed with the health instrument. So I'll give you an example. When we were building a model, we were being pure digital, it didn't work, right? So we, as a company, we started building the physical infrastructure at a block level or a panchayat level to serve masses. So what we started doing, we started putting up physical touch points, which we call e-clinic, right? And which is managed by a nurse from 9 to 6, right? And the patient can walk in and get connected to the doctor. They're doing similarly what you're doing at home. We do our own test of BP, sugar, whatever, right. And then consult with the doctor virtually or going directly basically to the doctor. So that's kind of, when you are building the solution for the rural and the masses, you have to keep in the mind they're not well versed like the way we are with the technology or the instrument, right? So similarly, the infrastructure, for them it works. But I would say, is it really expensive? It's not, right?
Okay.
It's not expensive, right? So probably
So
when you're
that's music to our ears.
Yes, it's not very expensive, right? Today, we are operating about 4,000 physical clinics, seeing 20,000 patients every day, and it's a cost viable business, right? So we have not burned any venture capital money so far as well. So I can promise that, right? And see the way we are again looking at it, the enhancing, the cost optimization, you might need to do a lot with the technology, but as in when we are serving, and I hope they become better, right? So he'll be touching on affordability on one aspect, which we are providing a solution at 1 rupee per day for the entire family, where we are giving physical infrastructure, basic diagnosis at the clinic, a doctor consultation, which is a qualified MBBS doctor consultation, a prescription, and also at times basic medicines are covered. So those are things which we are providing today to 1.2 crore customers. 70% of our customers are being women.
That's right, I.
Right.
Very good.
Why? So there are a lot of aspects. One, there are the ground challenges where the women do not have access to the female doctors. And then while there are also the technical challenges, when we are talking about covering the women, they also become a caregiver of the entire family, right? They're not coming consultation just for themselves. They're coming, they want to consult at times for their parents, for their kids, so we tell them, no, it's a consultation, you have to bring them. So they're the one who are pulling them out from the homes to get the consultation done. So there are the changes which you have to do. Then we started building as a company. We understand, the most important when you're building a solution, it has to be women-centric.
Yeah.
And the second, today the 75% of our workforce is also women.
Yep.
The doctors are women, the agents are women, the pharmacists. So all of the workforce which we are trying to build, we hopefully also have a leadership also women, which is also we are finding challenging, but largely as a company level, the workforce is women.
No, that's a beautiful example. And if I paraphrase you, the core product may not be different, but the operating model is certainly different. It's how you are reaching out to the women in the field, the staff that you have. The delivery model is more physical in nature than digital in nature. So those are the kind of changes. And it's possible to do it at a lower cost.
It is very much possible. I can compare ourselves with the US model, right? It won't be that advanced as the US. I've visited. US has also got a physical brick and mortar. There's a company called One Medical, which has got close to 5,000 physical centers across. And you will find them in the right at the San Francisco, right? So probably they are building obviously they're charging $100. We are charging $5. That's the difference. He talks about affordability, which is an India core, right? So affordability becomes a core of India. So that's.
So Joydeep, I wanted to add to that, and in particular, a little segue into micro insurance products. Do we need to operate them differently?
No, so I think what Neeraj has touched upon is very relevant. Core product, finally, when we talk of insurance is a paying product, it's a financial product, it's a financial solution to a problem. The problem could be an accident, problem could be a health breakdown, something which stops commerce, stops production, or stops activity. Then people don't have money. The insurance is merely a financial product. It might be called health insurance or motor insurance, but it's not an automotive product, it's not a health product. We have to understand that, right? It's a payer solution. But to make it all pervasive, useful, the ecosystem has to be managed. So what Neeraj is right now just pointing out is that he's making it comfortable for women to come and talk, women to come and discuss, and maybe become the real, the mouthpiece of their family, not just themselves, which wouldn't have been possible if if the empathy in the model was not there, right? Now, similarly, sales, micro insurance or micro health insurance or micro any sales also can't be, just men going around selling. And we always also complain about the fact that women also don't take part in financial decision making in India. That's a problem. Even people who are financially savvy, they shy away. But to do that for an effective 45-minute conversation, we have to think of bringing a whole lot more women into the distribution force. Worldwide, Japan, for example, there are all women sales force. Many other companies do that specifically because of the empathy, connection, and permanency. Trust is always seemed to be higher. It also creates livelihood, a lot of employment and livelihood. So the Bima Sakhi, which has just been announced by 2 days back, LIC and the Prime Minister, they announced it. Now this has been thought about, but remember what is the differentiator there? It's not just a women agency; it's a stipend. So it's an assurance that look, if you come out and do something, it's a tough job. You will face rejection. You will have lots of issues, but we will take care of you. So I'll take you back to a micro insurance example in 2000, in the again 2004 to 7, when I was in an insurance company. I used to run an insurance company. So we, along with the Financial Deepening Challenge Fund of UK, we launched a channel called CRIG, Community Rural Insurance Group. They were like a self-help group, but very small, 4 people, 5 people groups, because people need to find sustenance in community. It's a lonely job. You can't tell one person, you are an agent, you are this, you go and sell, you aren't. Those things don't work. People have to find solutions among themselves, discuss. Everybody might not take back everything from training together. So they have a community discuss where maybe somebody has imbibed it well, and then they're finding it easy. We gave them cycles, we gave them martial arts training because sometimes they venture into areas to collect premiums. So all those safety issues, umbrellas, branded umbrellas, and of course handheld terminals in those days to collect the 50 rupee, 40 rupee, 30 rupee premiums. Now that those were funded by some of the funding, but it was matched funds between the insurance company I used to run and the FDCF. So I'm saying that worked beautifully. That got awards everywhere, and it still continues in a way. But of course, India's moved on. So it is very important to look at not just the product.
Yeah.
This ecosystem, the provider, the caregiver, the people who are in it, the whole infrastructure has to be empathetic, and language also has to be seen in that respect. We can't just deal in English or Hindi or Tamil. We have to go down to the dialect and language if you have to make
and
a
all
difference.
the terms and conditions and inclusions and exclusions in insurance, and how do you communicate that?
So, ideally, even if you communicate, how many of you in urban India, read a whole home loan agreement or a demat account opening 50? You don't. So you trust, right? It's like a bank clearing, check clearing. There are so many things about checks, but if you give a check at morning 9:30 to the bank, by 3 o'clock the money will have. It's become like 100% reliable standard. So I think what we need to do, terms conditions apart, we have to evolve these platforms, and the regulator is going the right way. But I think a little tweak is required there. The platforms have to be such that it gives certainty to people. That if I give something today, in 6 hours, 12 hours, 2 hours, 4 days, 3 days, whatever it is, I get this response or I get this, documentation understood, that's all.
So that's a beautiful segue, because I wanted to just peel the onion on trust, because that's a huge thing in financial services, but even bigger in insurance. So one aspect of trust that you've touched upon is certainty or reliability, but then there's this whole aspect of the agent and the trust that the agent can build. Please do answer this one first, and then I'll move on.
So see, we can't. It's like statistics. You can say, is agency trustworthy, or is one particular agent trustworthy? Yeah. So there will always be issues and challenges. It may not be bad intention, it will be poor understanding. So finally, we have to come down to that age-old piece of marketing, right? Product, price, promotion, people. You cannot achieve anything unless you get all 4 correct, and maybe in this case, you have to get another thing correct, which is the prominence of, if you're trying to say the women product and women's discussion, and by a woman agent, and at the caregiver place also it's women. If you have to create, we have to create that for saying that this is for you.
Yeah.
Otherwise, the 4 P's hold good. It is an institutional business. The answer will have to lie institutionally. Trust has to be monitored. Let's say the guided journeys on the mobile, rather than depending upon the ingenuity of the individual to go and sell so many more.
No, so the reason I'm asking this also is that banks have built trust over years, and insurance companies are not well known in the markets.
But that's worldwide, no?
That is
Pallavi,
true.
I mean, worldwide banks have more trust than insurance. because of the very nature of the fact that insurance companies sometimes deny, and banks are a transactive savings where everything is liquid, it is understood, except for failing. By the way, banks, there are 100x more bank failures than insurance failures. Insurance failures can be counted by hand, across the world, from UK to Switzerland to. So therefore, I'm saying the trust to the individual to buy that product will come out of one certainty, which is driven by technology or SLAs, which are or regulatory standards or platforms, which has
Yes.
happened in banking.
Yes.
Earlier, banks used to do whatever they want. I mean, whichever timing, change timing, open branches, open different time. No, it's all standard, right? Clearing is standard. The switch is same. Second, it has to be done through products which are simple. However simple you make it, it's still going to be the most complex product, but salient features understood that this will happen. And lastly, by making sure that there are no barriers to communication.
Right.
We cannot ask people to always use smartphones when hardly few people, let's say women in rural India, they don't have smartphones. Their numbers keep changing. If we say claim is dependent on a phone number, numbers change. At the time of sale, there's a phone number. At the time of claim, that phone number has gone. So these are the issues which we have. All these Pradhan Mantri Yojanas and the Atal Pension Yojana, you have to use your phone number. So a very simplistic solution is using phone number as the policy number and making sure phone number remains, because people keep changing. But I'm just not going to solution mode here.
Yeah.
We have to simplify
We have to
things
solve
for trust.
this. No, so this is such a beautiful point, because this is so hard to do in reality. And I wanted to ask you, from your experience, I mean, when you enter a new market, I'm assuming that they don't know your organization, brand name. How have you built trust over time?
I think, see, one is, yes, I can take the credit, but I don't want to take the credit, very frankly, because I don't deserve that. I have largely built the trust through the channels, right? So, if I had to build that presence, today, like you mentioned, right? Other than LIC, people, even private company, they understand it's an LIC, right? Let's say for life insurance company. Similarly, when we were entering into the market, we started forming the partnerships, right? So microfinance on the one hand, cooperatives at one hand, banking, NBFCs, we started partnering. They had certain trust level already built in because they are giving money, right? And we were collecting money at times, right? So one, that advantage, we definitely got it. While also our infrastructure really helped when they started walking in, then they started trusting, because see, health is like giving your money, right? Going to a health checkup or speaking to a doctor has to be really, really, I think, in the right manner. Nothing can go wrong. Trust me, we have done close to 6.7 million consultations, 67 lakhs consultations. But if somebody asks, is there something can go wrong?
Anything can go wrong.
Anything can go wrong, right? Any moment. So that's something which we have to do is, yes, so while channel and helped us in building the reach, and today the things will change, I would say, building the trust today. And what I'm talking today, I would say it will be added a lot more with in next 1 year with the AI. And if you have any other, next thing is AI will be, reducing your costs in building a model. Maybe, if you were speaking to me about a year back, I may not been very confident, but today I'm very confident because I'm evaluating, and maybe after 1 year, we'll be speaking something differently.
Okay. So I'm sure there'll be questions on AI and insurance coming
Yes,
from that, and
yes,
I'll
yes.
leave that for an active participants here. But on channel, because trust and channel is so very important to penetrate, I wanted to understand why the insurance, and this is a question I have as a banker, not as an insurance expert, which is why I'm asking the two of you. Why has the insurance industry not used the BC channel more actively? Maybe to you, Joydeep, compared to its potential.
The BC channel has been accessed by the insurers, but remember, BC channel is a light touch. It's a transactive platform. So if you look at financial discussions or engagement, they're transactive finance. There is savings finance, investment finance, and protection finance. If you think of the 4 quadrants, the more you go on this side, it's more involved.
Yes.
So in a transaction that you want to withdraw money, you're in absolute zero uncertainty situation. You have money in the bank or not. You want to withdraw 200 rupees. You go, you take it out. There's a slip in that thermal paper, and you take it away. So the BC channel was actually invented for that. So
Yeah.
fit for purpose. If you look at BC channel is not truly fit for insurance, except for maybe payment of premiums or a receipt of money
Claims.
claim.
Claims settlement.
Receipt of money claim. That's what I'm saying. Claims this thing. Maybe claim filing. But if you expect all the BCs to be an expert in banking, remittance, and all insurance products, I mean, we are in barking up the wrong tree. As it is, we are talking now. We're talking open architecture everywhere, which means thousands and thousands of products with their different features and everything. You cannot even expect. Nobody in the industry, not even in regulator, will be conversant with every company's every product.
That's true.
So we cannot expect that person doing that.
That's true.
But it can be used for all the make transactions simple, smooth. Like UPI, we know how it is easy, useful. We are nonchalantly use it. 17 billion transactions per day. Now that's something which has happened because it is only being used for what it is for.
Yes, understood. Yeah.
So I think that its purpose is for that. We should use it for the insurance needs of a transaction, but not rely too much on it to have involved sales. Again, alleged mis-selling will happen because there will be gaps in understanding.
You want to add to that, Neeraj? Go ahead.
So I think very rightly mentioned, right? So see, insurance is already very complicated product. Let me even if I have to buy, I'll think 10 times, right? And you're expecting a customer who has to go through so much. So the one is why the banking are able to sell more insurance product, or let's say a channel which microfinance, or they're interacting more with the customers, right? Agents, why they're able to sell, right? Similarly, let me also, while I just tell you, one, it's already a transaction, less of transaction. Another problem is it's a very less utilized product, right? It's a 1 per 100, right? So similarly, if you can build some product where it has a higher engagement, and I'll tell you, where we are really proud of, one thing which I'm very, very proud of, our utilization in the product is about 67%.
Explain that a little bit more.
Right. So in a health, we enroll 100 clients, 67% utilize the product, end up having a consultation with the doctor.
At all or annual basis?
Annual basis. It's an active utilization about 70%. So we are far better than the insurance products.
Yes.
Right? So we have a better interaction. So they are able to build trust. But if we are having a less utilization, we would have been in the same position like the insurance. We have to do the lot push sale and everything. And another, also I want to add why I'm not also very big fan of Bima Sugam also.
Thank you for coming.
Yeah, I'm not sure why I'm not a big fan. I think it's purely for the deception, nothing else.
Deception.
Yeah,
Oh,
deception.
you have to. This is you opened a Pandora's box.
Right. So it will purely be a deception when you're throwing something in the market, right? So, throwing a pebble in the water. So that's a deception it will create. But will it increase the penetration? I would say no.
Or disruption, did you say?
Yeah,
Oh,
deception.
sorry.
Yeah,
Okay.
yeah. So I said, so will it increase the penetration? I would say no.
Why is that?
I'll tell you, probably the people who are going and buying the insurance themselves are very few in India, which
That's
remains the 5%, 95% remain the traditional models, right? Yes, if you combine Bima Sugam with Bima Vahak or Bima Sakhi, would really blend well.
Which is B2B2C.
B2B2C, then it'll work well. Insurance, nobody gets up in the morning and say, and then I'm going to buy an insurance. Trust
Today
me.
I'll go to the
right?
Bima Sugam website and buy.
So I think from 5%, maybe it will go to 5 or 6%. Maybe some people get excited, or something is happening in the market. Let me use the Paytm today to buy insurance. Something will happen, but I'm not very big fan. If the product has to be, people have to be convinced. People have to be talked about. It requires a lot of human interaction. Hence, I would say creating any digital channel will not add value unless it's combined with Bima Vahak or something like Bima Sakhi kind of model.
Just to probably clarify, the goal of Bima Sugam is not to create a D2C insurance channel. Bima Sugam is like the check clearing facility. It's being made to make sure that every agent, every bank, every broker, every IFA or whatever new things come up in the new Insurance Act now. So many things, so many new distribution models have been now put up. So this they have to log into Bima Sugam and do the sales process through Bima Sugam, so that the sales process is uniform, be it person A to person B. So it's not meant for directly buying. People can buy directly, but it is meant as a kind of an ERP for all the sellers, so that there's uniformity in sales. That's why it is.
I also think that there's this excitement to create digital public infrastructure in every industry, and it's one of these. And we do wish it well, and all the products get onto a platform that is standard. Okay, so I have 7 minutes left. 7 minutes for the whole thing, or including questions? Including. Okay, so I actually, let's go for questions, because we can talk forever, and there are many. So, yes, please go ahead. Would you be able to back up? Yeah.
Hi Pallavi, good morning. This is Trivikram from Microsave Consulting.
Nice to meet you.
So I have two things to say. When we were discussing about insurance product, so far every discussion going towards how insurance to be covered, what is the coverage area and all. But we don't talk about the claim part of it. And that is the biggest challenge which is in the rural area. Unless you give a confidence by settling the claim, not only settling the claim, it is lodgement of claim. Because if you talk about the ratio between death rate and the claim being lodged in the rural area, huge gap. So what we need to understand and talk about how this claim lodgement process has to be smoothened, how this can be lodged, because whenever you talk about this PMJJY SBY, we are talking about there more than 95% are being settled. It's perfectly all right. But whether the actual death has been lodged, death or accident has been lodged, whether those beneficiaries who have been given this benefit of PMJJY SBY, whether they know that how they will do the claim, lodge their claim at appropriate time, where, how to do it, it's still in very nascent stage, and this need to be worked out. Otherwise, coverage has no meaning. And that is how confidence is not getting built for the insurance products in the rural area. This is one. Let me complete the question, then you can answer. And second part, when we talk about coverage, numbers are coming a lot. But we don't know who is covered and who is not covered, because there is no centralized data, centralized repository available. Whatever repository is available, it is only numbers. But who? Whether I am insured under this PMJJY or SBY or not, I am not sure. Unless I look towards my passbook and see that my premium is being debited because I have given some consent at some point in time. So there are two concerned areas.
Go for it, Neeraj.
Thank you.
Yeah, I'll take the claim part. I think, when you say nobody talks about claim, because nobody wants to talk about problems, right? So, but let me put it very easy for you. Now, there are startups, there are a lot of ventures who are working to solve claims, and which is getting solved. And at our end also, we are building the InsurTech. The claim which used to take about, let's say, from the consumer to end, used to take about 60 or 70 days. We have got it down to 7 days from end to end. Now today, lot of, and I completely agree with you, the lot of process has to be worked upon, right? Which is being worked upon. You don't need a lengthy paper. You can simply create a WhatsApp, kind of a document. Somebody can push the document on the WhatsApp, which can be screened, and claim can be settled in. So there are a lot of companies, insurance companies, I think they were not here today, but they are talking about the settling the claim within 30 days to 3 days, 30 minutes to 3 days, which will happen, and which has started happening as far as the health is concerned, which has started happening as far as the motor is concerned, and it would happen in the life. The stake is slightly high, but I would say it will happen soon.
So Neeraj, my question was not related to settlement TAT. What I was talking about, settlement claim lodgement. So lodgement has a great gap between lodgement and death ratio. That is what I am telling you.
So that's what I'm saying today. The way the AI today, the building, there is a lot of customers, call centers and all those things, and the awareness at the client level moment. See, the insurance, when we talk about the life claims, there is a grief which has happened. They'll take own time to come and submit the claim. Health, yes, there is a priority, so they come on the time. I completely agree, but that's how the channels are, technology which is getting builded, where they can reach out someone on the phone, right? You don't want to speak to at times, but somebody can reach out to phone, and there's a bot which will respond to you immediately. So, so
Yeah. So, no, very good question. I think it's important. Lot of things happening. You're probably not seeing it. I'll give you one quick example. Neeraj is absolutely right. Technology is the answer. We have come out with a technology, Gen AI based technology, where if somebody is in a distress situation, health or motor situation, they don't know how to file the claim. There could be forms to fill. Even on a mobile, it's tedious. Our fingers are not getting thinner, right? So you just speak, and even if when you're speaking, it need not be exacting my policy number. Somebody can speak incoherently in from the car in the while the accidents happen and incoherently speak, but the whole engine will figure out, ask a few questions about health or motor, and convert that to a filed claim in milliseconds. So that's probably the answer, technology. The second question, very simple answer. All the data is there with information Insurance Information Bureau of India. That is the repository where every transaction, forget every insured, every transaction made by every insured, even if it's a change of nomination, everything is recorded every day. At the end of the day, all insurance companies data structure is the same. They get uploaded to in Insurance Information Bureau of India. You as a consumer are not authorized to see it. Like just like you cannot, can you go and see how many people bank, what is the proportion of male, female, this thing? Can you see that? Then why would you need to know that as a consumer? No, yourself you will know. So if you dematerialize your policies with any of the four or five NSDLs and all, you can go and see at one glance all your policies. You don't need to keep your original policy bond. At the time of claim, you do not need to hunt for the original policy bond. You can give the right to a manager, which is your trusted somebody in the family. In case something happens, they can access and they can claim using that. It's just that we don't use it. It is there. And the overall data, down to the little detail, is all available for the regulator, for the bureau, for the insurance companies to make sense of. Now, how much they do it or not, that's company wise. But information is today available at such a granular level. It's not funny. But I'm saying as a consumer, you don't, it's not obviously not going to be there because of data privacy. You don't know how many people are banking where. Right? That's the point.
Okay. So, yes. So, no, thank you for that. And of course, these two gentlemen are available after this to meet with you. In summary, Jan Dhan to Jan Suraksha was our topic. There are opportunities, there are gaps, and there is also success stories. But I just wanted to repeat a lot of the points was on not necessarily creating new products, but creating different operating models, building on trust, the channel being a very important method of building that trust. And of course, language. I really like that point on language and technology. So on that note, thank you, gentlemen, for being part of this conversation. And bye-bye. Have a nice day.
And yes, big round of applause for all of them again, please. Thank you very much, panelists. Thanks, audience, to be very engaging with the panelists. Good discussions. Thank you. May I request my team to hand over a token of appreciation. Could you please come ahead for a photograph? Thanks a lot. We'll break. We'll continue in this hall for another technical session.